SpaceX is about to IPO and they want to take us to the moon, not just in a literal sense, but in a financial one too, as they arrive on the Nasdaq on the 12th of June at a valuation of $1.75 trillion, the biggest stock market debut in history. And right now, every investor in the world is asking one question: should I buy SpaceX? But what does SpaceX IPO actually mean for Tesla? As Elon Musk is the largest shareholder of both Tesla and SpaceX. And when you read the filing and you look at what serious long-term investors have been quietly building, the SpaceX IPO might be one of the most bullish events in Tesla's history. Not for the obvious reasons, and not in the way the headlines are telling it, but just a quick note before we get into it. Everything in this video is financial education, not financial advice. Your capital is always at risk when you invest. But some of the research in this video comes from a newsletter I pay for and I rate very highly called Have Some Vision, and I want to credit Chris properly. Let me start with something buried in SpaceX amended S1 filing, a sentence that most people would read straight past. SpaceX may issue a significant amount of equity in connection with future transactions. Dan Ives at Wedbush Security said the probability of a SpaceX and Tesla merger is now at 80%. Fortune ran it on the front page, and when you look at the structure of the IPO, you start to understand exactly why that sentence is there. SpaceX founding documents give Elon 85% voting control through Class B shares, 10 votes per share. In a merger with Tesla, that drops to roughly 52.5%. Still a majority, but a dual vote structure written into the new bylaws designed specifically to protect his control through exactly this kind of deal. This was not built for an IPO, it was built for what comes after it. And here is why that matters for Tesla shareholders. If this merger happens, every Tesla shareholder becomes a SpaceX shareholder without buying the IPO, without paying the $2 trillion valuation. What most people are missing even before a merger enters the conversation, these two companies are already deeply financially connected in ways that barely get mentioned. Tesla currently holds nearly 19 million shares of SpaceX, and SpaceX spent roughly £500 million buying Tesla Megapacks in 2025 alone, up from around 200 million the year before. And they purchased 131 million pounds worth of Cybertrucks on top of that. SpaceX is already one of Tesla's biggest customers, and as it scales its launch sites, its factories, and eventually its off-Earth operations, that relationship only grows. The connection goes deeper than just a balance sheet. Tesla's Optimus robots are being built for a customer SpaceX did not even need to recruit. In space, on the moon, and eventually on Mars, robots are the perfect labor force because no food, water, or oxygen is needed. Elon has said the off-Earth applications for Optimus could eventually surpass those on Earth, and no other robotics company has a client like that. And then there is the chip story. Tesla needs billions of chips to scale robotaxi and Optimus. SpaceX needs them for Starlink and its data centers. And there is a joint initiative called Terafab involving Tesla, SpaceX, and Intel, designed to give both companies control of their own supply chain. The SpaceX IPO capital does not just fund Rocket, it funds the chip program that underpins Tesla's future. Here is where this gets genuinely interesting and where almost nobody in the mainstream conversation is looking. Earlier this year, SpaceX merged X into its structure in a deal valued at around $1.25 trillion. SpaceX has also filed with the FCC to launch up to 1 million solar paneled satellites, which is effectively data centers in space. Above the atmosphere, there are no night cycles, no cooling bills, no grid constraints, just unlimited zero-cost power for AI. And Elon has said that within 2 to 3 years, orbital AI will be the lowest cost compute option on the planet. And that is a structural advantage rivals cannot match. And Tesla feeds directly into that picture. Tesla's solar panels are already scaled for megapacks on Earth, and they're being adapted for those satellites. Tesla's FSD handles the physical navigation layer. Grok, now inside SpaceX structure, handles the reasoning. And Tesla's AI teams are already using Grok to accelerate FSD and Cybercab development, which means Tesla has internal access to world-class AI that other companies are paying for by the token. Starlink terminals are already appearing on the cybercabs as well. A global robo-taxi network needs connectivity everywhere for remote roads, tunnels, during outages, and Starlink is that backbone. These are not promises, these are things that are already happening in their ecosystem. Ron Barron has been investing in Tesla since 2014. He put in around $400 million at roughly 13 times the IPO price, and that has generated around $8 billion in profits. He has never sold a single personal share. He started investing in SpaceX as well in 2017 when it was valued at around $20 billion, putting in between 1.3 and 1.7 billion. That position is now estimated to be worth between 10 and 15 billion. SpaceX has surpassed Tesla as the largest holding in some of his funds. He does not invest in rocket propulsion or battery engineering. He invests in people, and he identified the person behind both businesses long before the market understood what those businesses were. Then there is Exodus Point Capital, a hedge fund managing over 10 billion in assets. In a single quarter, they moved their Tesla allocation from 0.29% of their portfolio to 14.7%. 1.8 billion into Tesla in one move, making it their single largest holding. These are not retail investors reacting to a headline. And one more thing worth knowing. Piper Sandler analyst Alexander Potter has a Tesla price target of £500 based on the core business without assigning any value to Optimus. At current prices, the market is not pricing in the thing that could change everything. And here's the frame that I keep coming back to. Most people look at Tesla and see a car company with an expensive valuation, but I think that's the wrong way to think about it, because when you look beneath the cars, the factories, and the quarterly earnings reports, Teslas start to resemble something very different. It has many of the characteristics of a venture capital investment, spending heavily today to pursue enormous opportunities tomorrow, and asking investors to buy into a vision of the future rather than the business that exists today. Normally, a company at this stage of its journey would still be private, and it would be backed by venture capital or a private equity firm building towards whatever it believes its defining moment will be. But instead, Tesla is doing it all in the full view of the public markets. And I looked at it as just a car company until Chris from Have Some Vision opened my eyes to what Tesla was. And now, as I look at it and I think about it, it looks more like a venture capital bet that happens to have a stock ticker, making it a wolf wrapped in a sheepskin cloak. The SpaceX IPO is not a threat to Tesla. It's announcing to the world the scale of what Tesla is already part of. But as I say, nothing in this video is financial advice. Your capital is always at risk when you invest, so think carefully and research before making any decision. But if you found this useful, the link to my email newsletter is in the description, or you can watch this video that YouTube recommends you next watch. Thank you.